NBA, economic slowdown, trade deal in the works, all that and more on this week's China Update. What's up everybody, it's Tony here with another episode of China Update where me and my professional colleagues put together the top developments that you need to know about the Middle Kingdom so you're on top of the world's #2 economy. We're jumping into this project because we believe that there needs to be more accessible information on the big macro developments coming out of the Middle Kingdom. Because of that, we're a new channel and we're sort of doing all this from scratch. So we need to know your feedback, your thoughts on our content, our format, our delivery, all that sort of stuff. If you like this, if this is your jam, make sure you subscribe and hit that bell button. We release one big video a week. You'll get it as soon as it's released so you are on top of the biggest news stories coming out of China. If you don't really want to follow us, but you dig what we're doing, it would be a massive help if you hit that like button. If you hit that like button, it basically tells YouTube's algorithms that we're doing a good job. So if you do like anything we're doing, if you think we're worth a damn, at the very least, hit that like button because it's a huge help for us. Let's dive in. It's been a busy week. Now, our first story is an NBA update for anybody who has been under a rock for the last few weeks. The NBA is currently between a rock and a hard place. The rock and the hard place, of course, being the United States public and Chinese censors. As you most probably know, this all began when Rockets General Manager Daryl Morey released a tweet a few weeks ago supporting the Hong Kong protests. In response to this, there was a huge Chinese backlash where the Rockets lost all their sponsorship in China. The NBA came out and apologized, but then they received backlash back in the United States from fans, regular Americans, and politicians who saw that as an example of selling out American values to get into overseas markets. The NBA then changed their stance, supporting Morey's freedom of expression and saying they were not going to punish or fire the general manager. This resulted in a straight up ban in China for the NBA. So where are we now? Well, things are still very much up in the air. The Chinese have quieted down a little bit on that side, and the commissioner of the NBA, Adam Silver, gave an interview at the Time 100 Health Summit where he brought up a couple of interesting points. First of all, he said that what has happened with China is going to cost the NBA a lot of money. It's going to suffer a substantial financial blow, but the league can take it in order to support freedom of expression. Two, Silver said that the Chinese side had put pressure on the NBA to fire or punish Daryl Morey for his tweets, something that Silver said the NBA was not going to do and that they stand behind the freedom of expression of all of their people. What's also interesting is on Friday morning, the Wall Street Journal released a report where they looked into research that is being conducted into the tweets that were tweeted at Daryl Morey after his initial tweet supporting Hong Kong. The finding of this research shows that the vast majority of the tweets that attacked Morey after this tweet were relatively new or brand new. The expert who they were speaking to in the Wall Street Journal said that though he could not say for sure whether this was a state-sponsored online attack, it did show all the signs of a state-sponsored action online. While we're on the topic of the NBA, we should bring up, of course, LeBron James, who was in the doghouse this week with fans and people around the world who are not very happy with his stance on the Hong Kong protests when he came out and said that Daryl Morey was not educated on the subject and should not have spoken. This caused a backlash in Hong Kong, in the United States, and this has probably been a tough week for him. I'm sure he will get over it though. We should also talk about the Chinese reaction. Now, the initial Chinese reaction was very, very strong, basically telling the NBA that they needed to apologize and this sort of behavior was not acceptable for any company that wants to make a profit in the People's Republic of China. Since then, however, it seems that a lot of the state-run media have taken their pedal off the gas and have cooled down some of the rhetoric. In fact, there have been some reports and commentaries coming out in the state media calling for Chinese people to calm down a little bit. So does this mean China has changed its views on overseas companies expressing their freedom of expression? Not really. This situation is somewhat unique. There are several reasons why, in this particular case, the Chinese state media might not want to be too fiery with its rhetoric and might want to be a little bit more low-key in their approach to the NBA. One, last week was an important week for US-China relations because Liu He, the vice premier of the People's Republic of China, was in Washington trying to negotiate a interim trade deal, which we'll discuss later in this episode. Two, the NBA is not like other companies from the US. The NBA essentially has a monopoly on this type of sport, the top basketball league in the world, essentially. And there are hundreds of millions of viewers in China who enjoy this game. So it's not like a flight company or an apparel brand that can just be replaced. 3, there is a lot of money involved. We have to remember that it's not just our Western capitalist systems that are susceptible to economic influence. There are big players in China involved that are politically connected, that don't want to lose billions of dollars because they have lucrative deals with the NBA going forward, including massive tech companies like Tencent. Another reason to keep in mind was that this was a really big deal. A lot of regular people, including regular Americans, were following this story. Politicians were beginning to get involved because of that attention. And finally, it's also worth keeping in mind that the Winter Olympics are coming up in a couple of years, and some commentators have pointed out that it is not a good look for Beijing to be banning entire sporting leagues when they're ramping up for a massive international sporting event like the Olympics. Regardless of what happens here, there is still going to be a lot of pressure on American companies going forward to balance the values that they have in the United States versus their desire to get into that China market. And the NBA will not be the final company to suffer financial loss. Okay, our next story is about Hong Kong. Now, there are 2 big developments that happened this week that we need to touch on here. First, Carrie, the chief executive of the SAR Special Administrative Region Government of Hong Kong, gave the 2019 report. This is essentially a State of the Union-esque speech that is given by the executive in Hong Kong. Now, the speech was widely ridiculed. She is facing a massive political crisis with the ongoing protests that have enjoyed international coverage over the last few months and are becoming increasingly divisive and violent. She, in her speech, did not respond to the 5 major demands of the protest movement, a couple of which enjoy popular support. For example, the University of Hong Kong released a poll showing that 90% of those polled indicated that they supported an independent inquiry into accusations of police brutality in Hong Kong. 80% also called for universal suffrage. Now, the second piece about Hong Kong, which is also very important, is that the House on Tuesday passed the Hong Kong Human Rights and Democracy Act that has gone through the House. It had passed with a unanimous vote and has gone to the Senate, and it enjoys bipartisan support in the Senate as well. It is most likely going to pass, and it is unlikely that the president is going to veto the legislation. And even if he did, it seems that there is a significant majority support within the houses to overturn that veto. So what is the Hong Kong Human Rights and Democracy Act? Well, it essentially has 2 important features which are worth discussing here. The first is the ability to put sanctions on individuals who undermine the autonomy of Hong Kong as a SAR of the People's Republic of China. The second requires the executive wing of the United States government to perform an investigation every year to see whether Hong Kong still qualifies for its special trading status with the United States, something that has enjoyed for many, many years and has underpinned Hong Kong's economic success in the past and will continue to do so going forward. So this is very, very important. Now, what has China's reaction been to the passing of this bill on Capitol Hill? It's not very surprising. Hong Kong affairs are China's affairs. Playing Hong Kong as a card will get the United States nowhere. These self-serving US politicians and treacherous attempts to roil Hong Kong will fail on all fronts. The US should quit meddling in China's internal affairs to allow peace and prosperity to reign supreme once again in Hong Kong. Okay guys, now let's look at the trade relationship between China and the US. Now, a few weeks ago, we told you that there was going to be a partial deal that was probably going to be negotiated last week, and lo and behold, it happened. It got across the line. There was some question in the first few days as to whether or not there really was an agreement. There was messaging coming out of the Trump administration White House saying that there was, but there wasn't much coming out of Beijing. Actually, early in the week on Tuesday, the Chinese side across many different media outlets within the PRC said, no, this is definitely the case. We have come to a partial agreement with the United States, and it is based on the understanding that there will be no new tariffs in exchange for the Chinese making large agribusiness purchases and implementing protections for intellectual property going forward. The Chinese actually spent a lot of time reassuring its citizens, international citizens, American citizens, and the markets that this definitely was going forward, so don't panic. They said, we're not like the US, we can't just send out a tweet confirming this stuff, we have to go through the correct processes before we can make an immediate statement, but this is definitely happening. Now remember guys, this is a partial agreement. There is some talk that this is a phase one on a multi-phase trajectory that is going to result in a complete comprehensive trade agreement between the first and second world's largest economies. I think that is very, very unlikely. Why? Because this so-called partial or level one deal is actually dealing with the low-hanging fruit, the sort of stuff that both sides were willing to nudge on for the last year and a half. The hard stuff, the structural issues that the Trump administration wants to get across the line vis-a-vis the Chinese system is going to be very, very difficult to do. And the Chinese consider this an attack on their sovereignty. And so that sort of stuff is going to be difficult. It also seems in the current political climate that the Trump administration is unlikely going to peel back those tariffs that are already in place, even though the Chinese side has stated on Thursday that the ultimate goal is to see a reduction in all of the tariffs that have been erected. The reason why this went across the line now is because both sides really needed this to happen. The Trump administration needed those business deals, those agro purchases for his base. He also wanted the stock market to be a bit more buoyant. It had been slow for about 3 or 4 weeks on the back of poor US manufacturing data that was released about a month ago. Now it seems the stocks have recovered somewhat and they're at the levels they were at the beginning of the month. The Chinese side as well, they needed a little bit of external pressure off their economy. We're going to be talking about some of the negative data coming out about the Chinese economy later in our China update, but the situation is pretty rough and it is mainly being caused by internal pressure. So the last thing they need is exacerbation from the outside. So this, like I said last week, this trade agreement is more an example of two boxers several rounds into a fight that have decided to give each other a few more minutes breathing time because they really need to take a breather for a couple of minutes. Okay guys, now our last story is about the Chinese economy and the bad data that has come out this week. So the first thing I want to bring up before we look at the big macro numbers is there was a very interesting report that was released looking into capital flight. Now capital flight is basically when you have money in a country that is going out illegally or people that are trying to get their money out of the country. The Chinese have very, very strict restrictions on capital leaving China. In fact, even though China is the second largest economy and one of the largest trading nations in the world, only about 2% of global trade is conducted in their currency. The Chinese hold their currency in place very, very strictly, and they make it very, very difficult for Chinese citizens to get their money out of the country. In fact, this has led many economists and commentators to say that the Chinese have not been keeping their currency artificially low for the last few years, but artificially high. Now, like I said, this report pointed to over $1 billion leaving the country through capital flight, which is very interesting because in 2015, 2016, the Chinese also had a capital flight issue that they're trying to deal with. Now, they had to spend over $1 trillion, with a T, trillion USD, to slow down the effects of capital flight on their currency, basically stabilizing their currency. During that period, they lost about 600 to 700 million USD to capital flight. So it seems that individuals are still trying to get their money out. The Chinese are trying to stop this from happening, and it is in very, very large quantities. This is why I think you'll still see pressure on the RMB to depreciate against the USD, even though since the announcement of the temporary trade truce last Friday, there has been a bit of a bump in the value of the RMB, but I think it's still going to be difficult to get it back to the below 7 levels that you saw a month or so ago. Now, there's also a couple of interesting points that came out about the economy this week. As you know, last week we were talking about the World Bank reducing their projections for the Chinese economy going forward this year, next year, and the year after. This week, the IMF, which is based in Washington, D.C., also reduced their forecast. They said that the growth for this year, 2019, was going to be 6% according to their projections, which is basically as low as the government would allow growth to be based on their own goals for growth. Then in 2020, you're going to see a reduction to 5.8%. Now, after that report came out on Wednesday, on Friday morning, we could look at the quarterly growth for the 3 months leading up to September in the People's Republic of China, and that was also below expectations. Growth came in at 6% for that quarter. This was below the 6.1% projection that economists had made for this quarter. So it seems that the economy is slowing down on all fronts. We're going to release a special report basically talking about the systemic and structural issues that the Chinese economy is facing at the moment, where this downward pressure is coming from, and what reforms the government needs to make, and what challenges they face going forward in terms of the economy. Because for me personally, I believe the Chinese have a tremendous challenge in front of them in terms of their economic success, and we're going to continue to see slowdown over the next few years. And the biggest risk the Chinese economy is facing is that of stagnation. The Chinese only have about 5-6 years left in the tank of high quality growth, in my opinion, if they take the right tact and make the liberalizing policy decisions that they need to make. Then after that, the demographic time bomb is going to hit, combined with other structural issues, and it's going to lead to an extended period of stagnation. Okay guys, that's our China update for this week. I hope you feel you're more informed on the Middle Kingdom. We really appreciate you watching the episode. If you liked it, make sure you hit that subscribe button, so then we release this every weekend. You get it right there in your suggested views, and you can be caught up on the big developments coming out of China in a short, accessible video. If it wasn't quite what you want to follow, but you dig what we're doing, can you please give us a like? It is a huge help. Like I said, it helps us with the algorithm. Basically tells it that we're not full of shit, we're doing a good job. Thank you so much. We'll see you next time on China Update.